And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in best success. Trade routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast. Today is Wednesday, October the 27th. Hoping that things are working correctly here this morning. Using kind of a different way to share the charts, and it seems to be running my computer a little bit slow. So I apologize if there's any hiccups going on here this morning. My name's John. Welcome again. We're going to be looking for context, good risk management, and infinite patience in our trading today. Thanks for joining me. As far as economic numbers this morning, the durable goods orders numbers came out largely as expected. Nothing huge, I think, happening in the markets due to that. But we also had international trade and wholesale and retail inventories. Nothing too impactful. We are still waiting, of course, for 9:30 Central this morning for the EIA crude status report. Okay, now it's in sync. Weird, there's a delay to the audio. All right, had to reload and it's working. Thank you for letting me know about that. Was hoping that I had a solution to the fact that we were losing the charts from time to time, but looks like the computer's running a little bit slow today, but looks like things are going all right. Well, as we are waking up this morning, stocks, U.S. indices anyway, we're set to open steady, lower. We've got a little bit of a boost now from the economic numbers that just came out. Some pretty strong earnings yesterday from Microsoft and Alphabet. Today's tech earnings are taking a rest. No tech earnings, no major tech earnings today. We're looking at Coca-Cola, McDonald's, Boeing, GM, Harley-Davidson, and ADP already out this morning. This afternoon, we're looking for Ford Motors, eBay, and Aflac, among lots of others. Long list. Nothing as far as huge corporations, if you don't call any of those huge corporations, right? So we get a surprise boost in crude inventories by the API last night, an additional 2.3 million barrels apparently on store here in the U.S. We're expecting a 1.9 million barrel boost from the EIA today, but are these recent boosts in crude oil kind of letting us know that perhaps the higher price is cutting off some of the demand for crude oil? I don't like paying this much for gasoline, but the way I drive these days, my car gets 3 weeks to the gallon, so I'm lucky that way. I don't have to be out driving around all the time. Okay, thank you, Ricardo. You do not have to be flat through crude.eia unless you are in step 2 or in a funded account, Mikhail. That's the only product that you would have to be flat for EIA. All right. Make sure you like, share, comment, question, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel so you can get notified when we do go live. VIX this morning up slightly, $16.09 index, down slightly, 93.08, and the 10-year yield has been on a slow grind to the downside since last Friday. It's down now to 1.58%. No, not really a hermit, Jerry. It just, I've been working from home, and it's been nice. I do miss going to the office and seeing people. I really enjoy the time I get to spend with all of you. And speaking of which, we do have group coaching again today. Here is the link. Go ahead and register, and I look forward to seeing you there again. Nat gas is flying again. Yeah, we're going to get a good look at that here when we get into the charts. As always, I like to say good morning to everybody. My older brother Rick is here, first one in the room. Rick, you win the prize this morning. It's always good to see you. I love you, brother. Janus, Brian, Clem, Ricardo, Chris, George, and Alfred has a question. What is the importance of the first minute of the open? Well, the opening range is something I think that's kind of a leftover from the trading pits, when the only time that you were allowed to trade a product was when it was open on the trading floor. So at 8:30 in the S&Ps, all of the brokers would be holding orders in their hands that were due fills right on the open, whether they were market orders or whether they were limit orders that were through their price, or stops that were getting set off on the open. That first opening range, they called it, was important. Because all the brokers sometimes would have a lot of orders, and it would take a longer period of time and perhaps a wider price range with which to complete the opening range. It was never a finite time level, like 1 minute only, or a price range. After the open, the exchange would go around and poll all the brokers and say, we think the opening range should be this. Do you agree? And if you filled orders outside of that level, you would have to expand the opening range. So they tried to make sure everybody had their prices in the opening range, and then they would announce it to the world. Now, in electronic trading, it's all you have to do if you want to execute an order right on the open is push a button. Now, there are going to be people that are going to be executing a large number of orders and buying or selling a large number of contracts on the open, depending on the day. Sometimes they're busier, sometimes they're just slower. The opening range is the range for the first minute of trade in electronic trading, the way I look at it. Other people look at it different. Some say it's 30 seconds. Some say it's 5 minutes. 5 minutes is there's too much of a range. It increases the risk too much. So one thing about the opening range is, if it is left at one extreme of the regular trading hour session or the other, let's say it's left at the high of the session, the way the opening range was, I believe, in gold yesterday, it can be an indication of seller control right off the open, or in the opposite direction, buyer control right off the open. If I remember right, S&Ps yesterday left the opening range at the low of the session. As soon as that opening range was penetrated, in other words, price got down below that opening range, it really changed the tone of the day from yesterday. We'll see if we can't take a look at that when we get to the charts. But it's a great question, Alfred. We have Spencer, good morning. Zarain, Laura, good morning. Drew, Harry, Mikhail, good morning. Nelson, the infamous Felix Escobar, is here. Good to see you, Felix. Patrick, Robert, Angelina, is anyone else's connection on NinjaTrader unstable? Pretty over these problems. I don't trade on NinjaTrader, so I'm not sure. I would email NinjaTrader, ask them if they're having some sort of difficulties. I haven't seen internally here at Top Step that folks are having a difficult time with their NinjaTrader platforms. Spencer, thanks for letting me know about the delay in the audio. Steven, Spencer, good morning. Now it's in sync. Good. Jerry, good. Had to reload. Now it's working. Jason Cargill, Mikhail, answered that question. If you are in crude oil, you should be flat during EIA. Jerry is awake. Ricardo, Mikhail, Harry. Please bring the prize with me this weekend. I will do that. And Jules, good morning. Get an alert message regarding your link. Good. I think that's good. Wow. Steven calculated the cost of gasoline in UK in dollars, paying $8 a gallon. Yeah, they sell us liters at the pump, so it sounds less when we buy. Oof. That's tough to take. I hope this doesn't last long, folks. Spencer kind of agreeing. If NinjaTrader didn't have ninja in the name, it wouldn't be so popular. Clunky platform. Everything is written in awful C# language. All right. Anyone's having trouble signing up for the link for coaching, or is it my computer setting? Let me take a look. Whoops. Oh, that's the wrong link. My apologies. Let me get the right one for you. Here it is. What a goof. There's the right link. There we go. All right. Hey, what's up, Dead Letter Opener? The missing link, yeah. Here he is. The missing gremlin. All right. Let's jump into the charts now. We got some good time here, so let's dive in and see what we're looking at as usual, starting left to right. So with the daily in crude, no problem. Everybody knows the rules. One bite each. Here's the daily. Boy, we've got this thing really moving to the upside. Monday, we took a look above weekly kickoff high. We rejected. Yesterday, we took a look above the weekly kickoff high. We rejected. Today, we have not gotten to take a look in regular trading hours at the weekly kickoff high. However, the overnight traded up to 84.51 within about 19 ticks. So we're seeing some resistance up here, of course. Open interest continues to slide post rollover. We lost 8,200 in open interest yesterday, seeing volume at least holding up here. Weekly kickoff certainly providing a degree of resistance for the last three sessions. Recent boosts in inventories, a sign of softening demand. We're not necessarily seeing it up in an upside structure, but I don't think we're far from seeing a potential change in market state here. Weekly kickoff high 84.70, weekly kickoff low 80.50, 30-minute chart. Settlement 84.65, just below that weekly kickoff high. We keep testing it. We keep kind of falling off. Yesterday, we talked about the fact that the market opened right in the middle of what would be a double distribution trend day on a market profile. You can just see that there's very little volume here, higher volume here, higher volume here. What we ended up doing yesterday, because we opened between those two higher volume nodes in an area that didn't get a lot of time or respect, the day before, the market traded basically to the low of value. Couldn't take out the overnight low. The market then turned and came up and tested the high of value, which is relatively close to another high volume node up here. And then the market just kind of settled. What are we looking at this morning? We're just about to open up. We've got some pretty substantial overnight shorts. What's that mean? Well, settlement was all the way up here at 84.70. All of our overnight shorter time frame, weaker hands traders were adding to shorts throughout the night. They've already, I think, reconciled some of them. The question for me is going to be, we've got a couple of areas of balance. We've got the last two sessions, which have created a little bit overlapping to higher area of balance above the previous area of balance that we recently broke out of on Monday. Are we going to head back to that, or are we going to stay in this area of balance? I'm going to be looking at our overnight low as an important level there. We've got an unchecked point of control just below that, which would be a very good visual for us to look for an opportunity. And if we cannot re-accept inside value from yesterday, in other words, we're going to want to come back up inside value and maintain some time there before I'm going to believe that this thing is ready to come back up and retest the weekly kickoff high, which, by the way, is a very high target area. The point of control is right there. Settlement's right there. The weekly kickoff high is right there. If we get up here, this is again, kind of a high target area. I think there's going to be some fish up here. Got to get there first. If we cannot accept inside value from yesterday, and we keep pushing the low of the extended trading hour session, we've got an inside session now. If we continue to press the low of this, we may start to begin to re-accept inside this short time frame area of value that again is overlapping. But if we can't hold this level, it makes sense that for us to come down and really just come down and recheck some of the unleft visuals that we've got down below in this market. That could take us basically all the way down to weekly kickoff low, which is 80.50. Again, we're out of balance. We're out of balance. I somehow lost my 1 minute chart, and I don't want to do anything right now to screw things up. So just looking at this first 30-minute bar, we can see that there was very little movement above. If this is not the high of the opening range, I would be surprised. We've got almost 2 minutes into the session. I'm going to be thinking that the opening range is the high of the session, which would tell me, hey, if that stays, we've got longer time frame sellers looking to push into this market to the sell side. As long as that stays, it gives us an opportunity to limit risk. It also can be a useful tool later on in the session, the way it was in the S&Ps yesterday. Speaking of which, just seeing what's going on here. So it would appear right now that the opening range is the high of the regular trading hour session in crude oil. If it remains that way, that's great trade location. We don't know how much sellers can control and take this market back to the downside. One of my basic, most of the time rules is if the opening range is the high of the session, I'm looking for shorts. Let's look at the S&Ps now. Okay, we've created a little bit of excess on the daily chart. By excess, I mean the market looked up here and rejected in the day time frame. This shadow up here is exhibiting a degree of excess. Excess is price got too expensive and was quickly rejected. Now, it doesn't mean that the high is in this market. We never know when that's going to happen. We've seen this market for the last 35, 40 years just continue to grind shorts to the upside. We added 1,400 in open interest yesterday. Volume here was a little bit higher, which I'm pleased with. It was about the same as the previous day on the New York Stock Exchange. So it's not like we brought a whole bunch of new business and volume up at these highs. We're starting to see in the whole moving averages that the momentum that we've had to the upside might actually be beginning to fall off, and it makes sense. We get pretty close to the weekly kickoff high here yesterday. Not real close, but a pretty good stab at it within about 10 points. And that's a half hour if in the right situation. So we have volume maintaining, open interest, adding 1,400, largely moot, a little bit higher volume. We've got, again, the hulls indicating potentially falling momentum. What are we looking at here? All right. So this was yesterday. Okay. Initially, I believe the opening range was the low of the session initially in the S&Ps. So we opened with a gap and buyers came in and bought this market pretty much right off the bat, if I'm remembering right. The opening range was the low. We had that move to the upside. But once that opening range fell apart, then it became another opportunity for us to catch the move to the downside, which basically took us back into yesterday's range. We opened, we did not close the gap relatively early. Something changed in the fact that we couldn't hold the opening range, and then we pushed to the downside. All right. So then what did we do? We flopped around. Last night we tested to this point of control. I'm going to leave that point of control until it's tested in regular trading hours. No overnight inventory. Settlement is 45.65 quarter. We're back in range, back in value. I'm going to suggest trying to stay a little bit patient here. I'm looking to see if we find acceptance or rejection in yesterday's area of value. If we cannot, maybe we'll find acceptance in the previous day's area of value. There was a chance of that yesterday, but it didn't happen. It hasn't happened yet. We're going to open above that level, but with no gaps, no overnight inventory. I'm going to try and stay relatively patient this morning. We've got two upside targets. We've got point of control, and we've got weekly kickoff high. Those are really the points, the visuals that I'm looking to achieve for us to the upside. Down below, we've got a lot of targets. Those are only going to be important when they become important. Patience. Nasdaq. Yeah, welcome back. Trading research. Yeah, we've started now to start the forecast at 7:45, so we have plenty of time, and we're all ready for the equity open. It's good to have you back. All right, now to the Nasdaq. Where are we? Where's my notes? Where's my stuff here? All right. Again, and this is a weekly kickoff high level. This is showing excess. On the daily chart, this long shadow means price got up there, but was relatively swiftly rejected in the day time frame. That's swiftly rejected. Volume and open interest were good. We added 3,400 in open interest yesterday on higher volume, on a higher move, on a push against an important inflection level. Yesterday's high was 5 ticks off the all-time December contract high. 5 ticks short of it. 5 ticks. Is that strong? Or is that kind of a weak high? I'll let you judge. Take a look at the 30-minute chart. We're just trading right at that weekly kickoff high level. We opened above it yesterday. We rallied. We took out that opening range, tried to reaccept inside value from the previous session, which was unsuccessful in the day session yesterday. We're opening basically at settlement, which is 15,545. We've got our point of control, which is right in the neighborhood. We've got weekly kickoff high right in the neighborhood. This might be one of those days where the opening inside range might be an important level to be active or at least alert for an opportunity. If the opening range remains the low of the session, for example, and we open above this inflection level of the weekly kickoff high, that might be important to jump into. All right, so right here, we're 21 minutes from opening. I'm going to be paying attention to see what happens. Good morning, Troy. Gold. This gold, geez. What are we going to do with this thing? All right. Long time frame where we've been in balance since back in June. Boy, that seems like a whole summer ago. Medium time frame structures to the upside. We've got 1, 2, 3, 4, 5 points of contact, including the low from the early session today. We got 1, 2, 3, 4 points of contact on this move to the upside. We've got a decent little channel here. We lost 5,800 in open interest yesterday. That pushback to the downside just evaporated a whole bunch of contracts. Seems like energy might be kind of falling off in this market. We had some pretty decent volume here falling off. It's been spotty. Open interest has been spotty. It's been up one day, down the next day, very indecisive and indirectional, and that makes sense because in the big picture, we're in a range. We're in a random walk here. We've basically been volleying back and forth to here, volley, the next volley up here. We got to see if we can hold this line down here, and this line down here, if you were available at the time, was a pretty decent look. Take a look at the 30-minute. We've opened. Who was that? That was hang on. Alfred Santoro. This red line right here was the high of the opening range in crude oil yesterday. The market had a very small range the previous day. The opening range was the dead high. If you notice that we were out of balance up against some resistance and took this opening range trade, you could have feasibly had a $10 move, which is $1,000. How about 2,000? Okay, here's 1805, 1895. That's 100 ticks. How about 1885? That's 200 ticks that you could have said, oh, hey, the opening range is the high. If we sell it, we may see a pretty decent move to the downside, which we did. All right. Here we go. No overnight inventory or gap. Okay, the markets come out a little bit. We've been attempting to kind of reject value from yesterday. I'm not seeing that there's anything grand that I'm expecting to happen here. Tomorrow we have preliminary GDP, and I think a lot of folks are going to be probably jockeying and positioning and hedging themselves for anything that might happen. Remember, it's the preliminary. It's not the actual. So it's probably not going to be as weighted. But, of course, that's our first look at GDP, and everybody's going to be looking at that. Okay, so yesterday we had a potential repair day, not from the previous day, but from the day before that. This very emotional day left a lot of teethy high volume nodes to low volume nodes. We just kind of moved through that area yesterday in search of any business that was left to do there. Apparently, we are still in that area. We're just going to be looking for opportunities today. The repair thing was repaired. I'm looking at this as a patience. I'm not really thinking in the current location that we're looking at any great opportunities. Of course, our overnight low will be an important level because it's going to be right up against that trend line on the daily chart if we even get the opportunity. But try and stay patient. I'm almost ready to move gold to the back burner for the time being, but every time I do that, it does something amazing. All right. Here's the euro, indecision and short time frame control, but just kind of random walk here. We lost 4,900 in open interest yesterday. That seems like a pretty big number. Volume, open interest, volume kind of idling. We were adding open interest one day, taking open interest away another day. It's just kind of not providing any good information, which that does happen. Volume and open interest sometimes is very clear, sometimes not so clear. We were in a balance up here. Monday, we broke out below that balance, and we've reestablished back in this area of balance. Balance to balance, 30-minute chart, new overnight longs. Okay, settlements all the way down here, 116.07. As the market was getting closer to opening up, we saw some buyers coming in, putting in this regular trading hour session high, very close to the extended trading hour session from yesterday. Until that happened, we were on an inside day. We started to take a look at a move above it. Here's another area of balance. Okay, we're in the previous area of balance down here. Okay, this becomes an important level here against all these highs and all these lows becomes something that I'm going to be looking at. If we reject this area of balance, that could bring price back up into this area of balance, which would be a pretty decent opportunity. We've got a visual level up here in the naked point of control here from Monday. Looks like there may be an opportunity for us to get there, but it's going to be difficult because we're already underway. We're up against the high from yesterday. There's lots of reasons and lots of different levels for us to look to take in the euro today. There always seems to be a lot of different levels. I'm going to be patient, wait to see what the regular trading hour provides as far as reference and extremes, and I'm going to focus on those as the day goes on. 10-year, bear flag, test of weekly kickoff low, bear flag. Is this one not going to pay? Looks like it's breaking out the upside on this one. What might have told us that? Well, we saw some pretty low volume here in the last couple of days. We did add 17,000 in open interest on an up day yesterday, which may have been an indication that buyers may be looking at coming into prevalence here. We noticed, that since Friday here, the yield has been steadily kind of falling. So, of course, price is going to rise as far as the 10-year and the bonds are concerned. Take a look at the 30-minute chart. Breaking out the high end of a bear flag negates the bear flag. We don't know if this is going to continue. We've got a whole bunch of longs in this market. 13 and 19 and a half, 30 seconds is settlement. It's marked right here. Put that on your charts. And we are testing the upper trend line. We are testing last week's high. We've got a visual just above that in the form of a naked point of control. If we find acceptance above here, I don't want to fight any moves that take us higher. If we come up here and fail, if we come back to this trend line, that gives me perhaps an opportunity to look for a short. But an interesting spot here for the 10-year. Apologize about that. Here we go, the nat gas. All right, so we've got an island bottom down here, ladies and gentlemen. The price moved down to it. We gapped to it 5 straight days. We gapped away from it. It's a pretty powerful reversal signal. Monday, Tuesday, Wednesday. Monday, we broke out above weekly kickoff high. We tested it unsuccessfully, successfully rejecting that level as support. Now the market looks like it's going to continue in support. It's got a couple of days of balance here. So I'm going to use balance rules. If we can't break out outside this balance, I'm going to fade the extreme. If we break out of this and we continue to move higher, I'm going to go with that. This 6,400 was a swing high back. I think it was 2014. And, already in the December contract, before it was December, we've looked above it. We didn't get that deep above it when we were trading the September contract, but 6,400 is, that's the continuation chart. That's the high from the swing from back in 2011. It's going to be an interesting day. Take a look at the 30-minute chart. Okay, very little overnight inventory. Here's the breakout above weekly kickoff high. It's pretty substantial. A test down below it. We did lose 16,000 in open interest on this move to the upside. Does that mean we liquidated some shorts? Some shorts that maybe got a little bit nervous because they were not getting what they were looking for. Now, what are we going to see tomorrow? We're going to see some buying coming into this market. We're going to see some volume coming in. We're going to see some open interest addition tomorrow as we come closer to that swing high from back in 2017. It's like a soap opera. As the market turns, will the natural gas reunite with 640? Will the S&Ps keep grinding higher? Will the Nasdaq ever take out that all-time high? Tune in. to As the Market Turns. All right. Well, we're in the middle of this week's chapter in this year's book of trading. I'm hoping you trade well today. Don't forget, we've got group coaching at 1 o'clock, and then I think at 2 or 3, we've got the Top Step trading conversation with Peter Davies and a couple other folks, including myself and Dan. I'm looking forward to seeing everybody for that. Right. Well, here you go, Fred. I'm not sure why you're not able to see the chat. I thought everybody could see the chat. I know I can. I don't know. Maybe it's some setting. I'll look into it though, Fred. Thank you for letting me know that. Ednelson, good morning. It's okay to be late. All right, Harry. Take your deep breath. Let's be grateful, humble, and creative in our trading today. I'm looking forward to seeing everybody later this afternoon. I guess we're probably not going to be having a recap today because of the Top Step trading conversation that we're having, but I'll look forward to seeing you group coaching and back here again tomorrow morning at 7:45. Almost said 8 o'clock at 7:45 for the market forecast. Like sands through the hourglass. Those are the days of our money. All right. All right, folks. I will bid you adieu. I'll see you in the pit in a couple of minutes. Trade well today. Get out there and profit. I'm looking forward to your success. And we'll see you soon. Have a good one.